Hello traders, this is Rich from Tradesight. This is the market preview for Wednesday, March 5th, 2014. Well, we wound up with an update across the board as we were expecting, plus I have to admit a bit more for sure. The internals didn't pan out. The price setup didn't pan out for a follow through to the downside yesterday. The scans that we look at in the market reviews didn't pan out for downside for Tuesday's session, and that's exactly what we got. We got a snapback to the upside. Certainly it was geopolitical driven, and you could say, well, it was the news that did it, but at the same time, the market was not pricing in a big down move yesterday, and so what we got was really just a kind of a the reciprocal move to what we had yesterday, plus a little bit. So we wound up settling up 28.5 handles, with the ES up 48 handles on the NQs, and picked up 200 plus on the broad market side. The market internals today were absolutely excellent. We were plus 2,000 advancers on New York, which is gold medal, and the Nasdaq side was plus 1,700 issues. The VIX dropped about $2, and the trend tanked down to 0.66 on the day. So without further ado, let's move on and take a look at prices and levels. All right, so first up are the ES futures. Obviously, we left a big gap here. We're starting to kind of expand the volatility up here, as you can see, and that can actually be one indication of a top. So definitely be aware of that. The price did interact with that 8/8 level at 1875, so that's clearly the level here to the upside. To the downside, the session low from Tuesday is going to be important, about 1861, and then the gap fill, which is coincident with the 10 EMA, is going to come into play next. If the market does power higher above 1875, 1906 and a quarter is your next level. Make sure you note that we're going to be into the overbought territory on the Gann box when we do cross and sell above 1875, if that is in fact the direction that the market would like to take. On the NQ side, fairly similar price action, but we didn't quite clear the previous high on a closing basis. We did make a new closing high in the move, as you can see, but we didn't clear and settle above the old high. The other notable distinction is that we're below the 8/8 level here, and haven't even touched it yet. Whereas on the broad market side, we did touch it and interact with it on the day. To the downside, if we start to roll to the downside, previous day's low is going to be important, and then the 10 EMA is going to come into play with the gap fill around the 7/8 level, so that's going to be important there too. The Dow was up 200 plus on the day, which was good enough for a new high close on the move off of this swing low here from February. But keep in mind that we just barely matched the previous high intraday, so we found a little bit of resistance there, and there's going to be substantial resistance here at the static trend line if they push higher. If the static trend line does in fact get taken out, then we're going to be looking at this 5/8 level at 1652, which is also the old high close on the move. Kind of unfortunately for the chart watchers here, the TLT obviously tanked on the day, was much lower, making a multi-day low here. We're 12 days up here, and really need to get back up here and have another surge to the upside before we can have any kind of a shot at getting that 13 exhaustion warning. Keep in mind that we do get that 13 exhaustion warning. It's probably going to be approximately a double top here on the TLT chart, and that's going to be pretty notable. Moving on to oil futures, we've got king and queen candles here at range high off of this move. Here's your king. That's the big up bar to the downside. The queen is the one to the downside. Forgive me if you don't particularly like that characterization, but that's what the technicians tend to call this pattern. To the downside, if we do break lower, the 10 EMA is going to be key support, which is also approximately the low of the day. from Tuesday, and if we roll below that, then the 5 ace level at 101.56 will come into play. We haven't played with this 8 ace level at 106 and a quarter yet, and that still may be in the cards. Maybe in the cards for a couple of reasons. First thing is that we're not anywhere near an exhaustion warning here from the seeker, so we definitely could push higher before we have any kind of trouble with an exhaustion warning from the seeker. Gold futures posted a similar day to the to the crude futures. The key thing here is that there's no gap left up here. Everything's covered up. We have this more or less king and queen pattern, even though we did expand the range intraday to the downside. It found support at the 10 EMA before bouncing, but certainly this is an area of congestion in the market, especially with the static trend line just overhead here. So if we take that out, 1375 is still going to be the trade to and the go-to target. Here's a look at the 10-day trend. Obviously took a little roll to the downside here. You can see that because we had that pretty low close in the trend today. We closed about 0.66. So that's getting the average back down to the neutral area. If we do want to go higher here with the market, there's plenty of room here in the 10-day trend before we get to that overbought threshold of 0.85. All right, so here's a look at the individual sectors ranked from best to worst. Broker dealers were last laggard yesterday. They reversed course and asserted their volatility today, and were top gun today. Defense index was also real hot today. Transports were near the top of the list, which is really good at this point in the move. The OSX, the oil services was strong, but not nearly as strong as the transports. Would love to see them a little bit higher on the list. Gold and silver index, no surprise, last laggard on a bounce day. Let's drill down and take a look at the individual charts now. All right, best sector of the day was the XBD. Here's a look at the chart. Big range expansion candle to the upside off of the recent move. Hasn't really cleared the previous high. Note that this level right here at 162.50 is a double level. It's the static trend line off of this 9-bar drop, and also the 8 ace level off the mirror math box. So that's a very formidable level. A lot of punch here to the upside. If this does get taken out and goes to the upside, we'll get into this overbought area in the Gann box with 165 and 5 ace, and then 168 and 3/4 next to the upside. Note that the MACD is positive, with momentum kicking in here above the zero line in the MACD. Transports were pretty spiffy today. Keep in mind that we're probably going to find some pretty decent resistance in the Gann box here at 7,500, which is the 8 ace level, and we're also 8 bars up in this push to the upside. So Wednesday could be a kind of a resting day, since we're going to be 9 bars up, and especially after getting into after Wednesday will be a resting day after being 8 bars up here and then pushing into this key 8 ace area. BTK index was up a full 2%, but you can see that still well off of the previous high. We're trying to get a little bit deeper into the count here. We're into the overbought area on the Gann box, and definitely this previous high and perhaps even a frame shift could be in play before we reach that 13 exhaustion warning. Semiconductors made a new high on the move and also a new high close on the move. Note that we're trying to leave this congestion area and this consolidation around the 8 ace area. So we're at the 1 ace area. Next area is going to be 578.13 if we continue to the upside. Oil services index was okay, but not great. We're into that 4 ace level, which is always a big level. The biggest levels are the 0 ace, the 4 ace, and the 8 ace for sure. Now we're up here into this 8 ace level, and note also how it was a swing high here back in December, where we started to find some resistance here initially. So a little different character here because we don't have the resistance from the 50 DMA. We're well above that, and we're above all 3 major moving averages. So definitely we could see this thing roll back higher here and see some upward momentum before we get anywhere near a seeker exhaustion warning. We'll take a look at the XAU real quickly. Still kind of gaming this 8 ace level at 100. So no surprise here that we're still kind of glued here. In the bigger time frames, this actually is starting to look a little bit interesting. It's really kind of a cup and handle here. Here's your cup, and here's your handle. If we break out, we're probably going to wind up taking a shot at this 106 and a quarter area. And if we settle above that, we will kick in the frame shift to the upside. All right, folks. As always, thanks for listening. This has been Rich for Tradesight. And please, if you find these videos educational and worthwhile, give us a thumbs up. Appreciate that.